But let's get a little bit more on India's outlook with Rajesh Saluja, CEO and MD of ASK Private Wealth, one of India's leading assets and wealth management firms, $10 billion in assets under management. Rajesh, thanks for joining us. We heard from one of our previous guests there, Mark Franklin, just a moment ago, about how the investing landscape in India has changed, where he's putting money to work. I mean, you've been in business now about 18 years, I believe. How have you seen the wealth advisory and management business change in that time, and where are you seeing the opportunities now?
Good morning. Firstly, thank you for having me on the show. Indian wealth managers are very well placed to ride the economic growth that India is seeing, especially due to the financialization of savings, and that are also getting fueled into the capital markets. And some of the leading players are benefiting in a very large way due to the monetization deals and some of the operational efficiencies that are taking place in the Indian wealth management industry. You may be aware, but roughly about 1 to 1.2 trillion of financial assets are owned by India's HNI. And the Indian wealth managers especially have got close to 80% share in this segment as compared to some of the global players and banks. And we've seen that as a big trend play out over the last 5 to 7 years, largely due to the ability of the Indian firms to personalize solutions and customize to local needs very quickly in a nimble-footed way as compared to some of the larger players. India has a healthy savings rate of 30% of GDP and a savings pool of $800 billion. And investment in capital markets has also gone up from 2% in FY16 to now close to 7%. Of household savings getting into a capital markets. Even the number of ultra HNIs, which are roughly 13,000 odd, this number has been growing by 12 to 13% every year. So between HNI and ultra HNI segment, we are seeing a fairly secular growth, and that's really opening up a huge potential for all the Indian wealth management players, including us.
Yes, so we are seeing a narrative of growing wealth, a growing middle class, more wealthy people in India as well. So how do you expect you're going to be increasing your assets over the next few years? And are you going to be hiring more relationship managers?
Yes, given, we are seeing also a large number of HNIs coming in from Tier 2 and Tier 3 cities, which was not there earlier. So I think one of the strategies is to expand our distribution footprint from 15 to 25 cities. Also, we are looking at a global footprint because a lot of non-resident Indians are very keen to invest back in India. So we've taken licenses in Dubai, Singapore, and soon in London. So we are adding relationship managers, really increasing from a number of 70 to 200, literally in about 18 months. So very aggressive expansion to cater to some of the requirements that have come about for all the reasons I mentioned: monetization, people moving away from traditional hard assets into financial assets, and also a lot of product innovation that is taking place, aided by the regulator and some of the new Indian wealth management firms that are providing many unique investment ideas as compared to traditional vanilla products to the HNI and ultra HNI segment.
Have you tapped into Gift City when you're looking to introduce products for your wealthy clients?
Of course. It's a key part of the strategy, both for clients who are looking to invest outside India and diversify. And we've seen that trend over the last 7 to 8 years, along with all the non-resident Indians and foreign nationals, including institutions that want to tap into India. Gift City is a very good alternative. So we have taken an office there, taken a license, and also launching a couple of investment funds through Gift City.
How are you reaching some of your clients that are in India's smaller towns? And do you find that perhaps their needs are different in the ways from some of your clients in the bigger cities?
Yes, I think the exposure to financial assets is still limited, although we are seeing this trend not only in Tier 2, but even in Tier 1 cities, where the next gen who have studied abroad have come back, and they are more keen to look at financial portfolio and financial investments rather than traditional investments into real estate. So that's a big driver. Having said that, in Tier 2 and Tier 3 cities, since their exposure is recent and their experience is limited, they tend to be more conservative in the way they look at investments.
Rajesh, before we let you go, one of the themes we're talking about at the moment is the possibility or the probability of a second Trump presidency, what that means for potentially a stronger US dollar, a weakening emerging market currencies. How are you factoring this into your investment advice?
There will always be some geopolitical challenges from time to time, whether it is, US or China. The way we look at advising clients is more from a longer-term perspective. One, of course, expectation is that post-elections or closer to elections, or maybe by the end of this year, early next year, there would be rate cuts. So we are aligning fixed income portfolios, keeping in mind an expected rate cut. But from a longer-term standpoint, I think this decade is probably going to be a golden one for India. We are one of the fastest growing economies. Even the central bank has predicted close to 7.5% GDP growth. And all the other factors that I mentioned, government capex, private capex picking up in lots of segments. This is making India look at a very, very attractive sort of scenario for the next 5 to 10 years. So we are keeping clients focused on the long term. Geopolitical challenges or newly elected presidents or changes in government could have shorter term impacts. But from a long term perspective, we are very, very bullish in India.
All right, Rajesh Saluja of ASK Private Wealth, thank you so much for joining us today. Now let's get back to that breaking news from a moment ago.